All right, so welcoming everyone to the first full formal webinar for 2016. Today is Friday, 15th Jan, and the plan is to look at all the global indices and then do all the Indian indices, of course. So let me just add that. And then hopefully go through as many of the Nifty Junior stocks as we can. So that's the plan for today. Let's see how well it goes. So I'm guessing that all of you have, of course, been watching the markets, and you have, of course, seen the, what would I say, the meltdown today in the market after 2:30, and there is, I guess, nothing. The best chart, which I'm sure some of you would have seen, is this one itself. The Nifty NSE chart and the graph on Nifty on the NSE there, right? Between 7,500 and 7,530, 540 for the whole day. And then after about 2:30, it just, took off on the way down. And at this point, really, there doesn't seem to be anything, there to really stop it. I think before we, get into any of the global indices, we're also to get our attention to this, right? So this is the US markets as we speak, right? This is little delayed data, but as real time as we need. And if we look at all the NASDAQ stuff, it's all 2.5 to, even, well, actually, it's recovered a bit because just a little bit while back when I was looking at it, it was almost 3% down, some of them, and seems to have recovered slightly. So this is on Yahoo Finance, but whatever, it's a pretty bad cut at open of 2.5% on the NASDAQ. And if you look at the Dow Jones, that's also down 2%. Of course, the volatility index is up. Typically, that's what happens when markets tend to fall. The volatility, of course, increases, so that's not a surprise. And if you look at the Dow Jones, then it's all 2.5% down. But having said that, I must say that, this has actually recovered a bit, and it was 3% down or something like that. Let's just put it up. Hopefully it comes fast. So if you look at the 5-day chart, right, then you can see that today it is definitely up. So it looks like a gap down opening that happened today on the US markets, and it has definitely sank. Now, while all this is happening, if we quickly look at Europe, then Europe, the DAX, the big most important one, is down 3%. That's a lot, right? So that's 3% down, and probably triggered by what happened in the US. The gap down. CAC is down 2.93%. So across the board, it's all red. I'm sure the commentators on TV are using the word bloodbath. And if this continues, and this is how US closes and Europe closes tonight, then looks like we'll probably have a gap down open on Monday morning in India. So that's, the first few minutes of this session. So I want to quickly look at the global indices and see how they are really faring. So let me get 1 second. Yeah. Okay. So we'll look at the Dow Jones first. And something it mentioned in a few days back was how it had clearly put a important top in this area towards, second half of last year, and there was a a distribution pattern in a sense that was clearly going on. And if we zoom into that, we had mentioned about a sort of a multiple top here, the whole second half of the last year here, and then towards the end of last year it was here. And if I were to zoom in a little bit more, so this is not live chart, this is end of day. So this is yesterday's candle, which was a green candle, but today's is 3% down. And just to go back to the numbers, if we look at where the Dow Jones is now, where is that? It's at 15,980, right? The Dow Jones as we speak, 15,980. And if we just take that and put it on this chart, we are talking about actually this support right there having been broken, right? So I'll need to zoom out to, let's get that 15,980 clearly means that we are already somewhere there. Okay, a little bit higher probably, yeah, right? So this is where the market is. The most recent line I have put for discussion, I'm just going to make it the thickest line, or let me make it a different color so that the reference is easy. I'll just make it white. All right, okay. So you can see that it's really come to an important support level, which was tested on September last year. And before that, if we, where is this? Yeah, zoom out, you will see that this is actually pretty significant. So I'm referring to the white support line. This is from 2014 all the way, and by the looks of it, really no reason to believe that the support is going to hold and it's going to come back up. As a matter of fact, the support lower at 15,480 is definitely a better and a stronger support, and that's about 500 points lower than where we are. So that's about another 3 to 4% cut. So we just need one more day like today in terms of a fall, and we will hit that support level. And that's, in my opinion, if that goes, then 14,500, another 1,000 points down is a very distinct possibility. So that's as far as the Dow Jones is concerned. And not sure if any of our viewers have any an international trading account, but I guess this is the best time to look at shorting Dow Jones futures, right? And to look at that, or look at a ETF which could perhaps do that. So that's as far as the Dow Jones is concerned. We probably have the same picture on the S&P, right? But just to be sure, let's have a look at that. Okay, this is really zoomed out. Restore, 1 second. All right, so something wrong with this data. We're just going to move on, and then let's look at DAX, right? Now DAX, because that's the most important one in Europe. And this is a chart from 2008, so please note that at the point of my cursor on the left side of the screen, that's the 2007 peak. Then we crossed that here in 2013. We went from 8,000 on DAX to 12,000, and we are now clearly on the way down on that, right? And if I zoom in to the latest part, then this is where we are, and clearly you can see that we are on a downtrend. Now if I look at the DAX on the current levels, and we just go back to current live data sort of, the DAX is at 9,492, 9,489 as we speak. It has slipped a little bit more, 9,490. Okay, and where is 9,490? 9,490 is there approximately, a little bit higher. Right, so that's where we are, and as you can see, this is also at a not the most important probably, but there is a support level there, and this is where the market is right now. Please note that on Thursday we had a hammer candle, but absolutely zero confirmation, right? So just reiterating the whole theory about the importance of confirmation in anything that we do. And if we zoom out, want to look at whether we are at a similar support resistance level like the way we saw for the Dow Jones. And this, where the white line is really in the middle of, I would say, no man's land. It's not particularly a support level. There's a lot of, it's more like a pivot level, flipping above and below this. So it's not like it's not support, but it's not support really in a strong sense. So at around 9,500, there'll probably be definitely some support. But if that 9,250, 9,150 breaks, then we are definitely looking at lower levels, and that will quite possibly take us to 8,000 on the DAX, which will test the 2007 peak. And very possible that this is what is in store for the German index. And if that's the case, we're talking about a fall from almost 9.7 to 8, about what, 20%. And who knows what that could mean for India, right? And then looking at, I'm just going to let's look at FTSE. I will forget Paris. FTSE, so let me remove that. Okay, so FTSE is definitely at some sort of support level there, and this is again a multi-year chart, and it is now breaking the 2000. So look at the FTSE. This is interesting because we are now below the 2008 high, which is in this zone right here on the left. And at this rate, we could possibly be heading to 5,400 from having gone to a peak of 7,000. Clearly, there is a, what would I say? A definite downtrend. Again, something we discussed on Monday's session, and it's just playing out. A sort of triple bottom, and here again you can see that the hammer type candle of Thursday yesterday did not really make any difference at all. No confirmation. We are so where are we on the values? So the FTSE is at 5,790. 5,790 actually means I have to again zoom out to be able to put that number. Okay, it's quite a bit of zoom out I have to do. Wow, okay. So we're looking at yep, there we are approximately. Okay, so we have actually gone below this level and recovered, but whether this recovery will last for the rest of the day, time only will tell. Right, so this is the other thing about so you across the board we are not really looking at any strength at all. If anything, it's the downtrend which is definitely just getting reaffirmed with lower bottoms getting formed. Lastly, I want to look at Nikkei. Okay, so if you look at Nikkei here, again, so you can see one thing about Nikkei is that we really have right, so it has come to an important support level at this level at and formed a hammer. But if this support level breaks, then we are talking about, okay, something wrong with this data, that's why it's scrolling badly, right? But anyhow, I hope you get this point, even though the chart is not really good, that if this level breaks, which is a pretty important level, as you can see, right, I really hope you can make out, then we are looking at definitely 16,000 on the Nikkei right now. Okay, unfortunately I don't have the Chinese index here. Just give me 30 seconds, I'll try and bring it up. Slightly longer term picture for China, and you can see that Yeah, and it closed at nice psychological number of 2,900 Shanghai, right? And that was 3.5% down today. And if you look at this from 2012 onwards, so you can see that last year's this up move that is all constantly talked about in the media, and this is the correction. And what you can definitely see is that if you can see my the horizontal level, that was a support of around 3052, and that has clearly been broken today, and we have 2900. And well, if we have to really look at support in terms of China, then really good support is possibly only somewhere there, or maybe even there, but we are really close to that. And given the unfortunately, we don't have volume, but I'm guessing the momentum is, quite strong. You can get a sense of that by looking at the steepness of the fall here. You can just see it's like more like a vertical line down. Plus, I don't think the final bad news is out of China at all. We've got growing concerns about the slowing economy, about the capital flight, about the depreciating yuan, all those things. And there's nothing in this chart which makes me believe that this downfall in China is over. And looks like China is actually driving the rest of the market, rest of the world at least, right? So this is possibly, we are looking at what, at least 2820, which is not much down, but in terms of some meaningful support, it is at least according to this chart around 2450, and that's another what, 400 points, 400 500 points, and we are talking about that's another 15-20% down on the Chinese index. So this rub off is definitely going to happen on India. There's no doubt that we are going to also feel the pain of that. So bringing the Nifty into the picture, let me quickly get that up. All right, and let's see, 50. So yeah, all right. All right, so you should be able to see the NSE chart, maybe a slightly messy a bit. What you can see basically is the continuing downtrend, and today we finally, broke this level quite decisively, which was at 7,540. We attempted to go up, right, during the day, and then we've just not managed to do that, and it has come right now to that level that probably a lot of people were hoping would not break, where we formed a gravestone doji almost day before yesterday, which is at 7,437. We are just a few points shy of this low. Is 7427.3. This low is 7425. It's just 2 points, right? And by the looks of it, this is broken on Monday morning. And then what levels are we looking at? Well, let's have a look. I don't think there's anything optimistic at all. At the very least, you're looking at this level, which is at 7,200. So you're talking about almost 220 point cut. This could just happen, if not Monday, by Tuesday, Wednesday. And once that gets broken, then at least according to me, the next support is only here at around 6,820, right? So this is where the support levels I would think for the Nifty are. Like I reiterated on the Monday session, if 6,800 doesn't hold, then we are set to look at testing the multi-year 6,400 peak, which in my opinion, at some point has to be tested. I've been saying this over and over again. So are we heading there? By the looks of it, it might be a little premature to say 6,300 right now, but quite honestly, it's just about 1,000 points below our current price of 7437, thereabouts, and we're talking about a 15% cut, which is very much in line with what we saw for the rest of the world, a 15% cut on the Nifty index. And if that's the case, then there's almost everything else is definitely headed down. Okay. All right. So since we want to do Nifty Junior today, let's just look at some of the, sorry, say the symbols. Yeah, I don't want this. We'll just keep that. All right. Oh, so I think if there's anything really not by design, then there's one thing which is very clear on this chart. I hope you can see the Nifty Junior on your side and in the recording now, which is that has clearly broken the support. The Nifty has not, but the Nifty Junior has. I think a fantastic example of why it is so important to track multiple indices and the heads up that it can give you, right? So the Nifty Junior has clearly and decisively broken this level of around 18,800. You've got a very strong red Marubozu candle down. This is a support of 1 year support. You've got multiple bottoms on that level here, and by the looks of it, there is definitely further downside, and the next support is, well, at this level of 17,640. So we're talking about easily a further 1,000-point fall, and after that we're talking about 16,100. That's almost 2,400 points fall on the Nifty Junior. So the mid cap space is definitely bleeding more than the large cap space. That's something that is a clear, I think, takeaway from today's session. And yeah, so looking at the sector indices now, I don't even know whether you're just going to see a lot of bleed which is there. On the bank Nifty, you can see that the movement down has gotten accelerated. There is a very interesting chart. Okay, talking about the bank Nifty, let me see if I can uh, take this. 1 second. Oops. Okay. Looks like I missed some of the recording. Oh, that's really bad. Huh. All right. Oh, cha. Okay, so let's look at, okay, for the sake of the recording, I have to just say this again, that across the board, we've got really bad news as far as the markets are concerned. Every sector is really beaten down a lot, and sector after sector, there has been a breakdown of various supports. There is really nothing which is of any hope for the bulls. There could be some bounce on Monday if we saw in the DAX intraday the bounce continues, and then maybe in the US, but that's only for the short term. And then after that, we've got to look at further down moves that could happen in the next few days or weeks, right? So that is basically the situation as far as the markets are concerned, and we're talking about 10, 15, 20% cuts, by the way, right? Just to put that on record, that are being possible on the global indices, on the sector indices in India, across the board, and we should be prepared for that. Having said that, again, for the record, there could be really good valuations coming up from a fundamental perspective, and it's high time that we need to do a deep fundamental review, I think, of the market with all the sector indices and those who are sitting on cash should be prepared to invest it at some point. I don't know when, but sometime during this year probably, when valuations become really, really attractive. Finally, it's that 8-year cycle, 10-year cycle, depending on what you read. After the 2008-9 crash, we've had a one-way street up, and now it's maybe time for a bear market, at least in the next few weeks, months. If we are not already in one, we could definitely be getting into one, and then after that, a long and painful recovery, right? So that's what. So it's a merry time for the bears, right? And if you haven't yet shorted, then better learn quickly. And really going to be a lot of pain for the bulls or anybody holding any long positions, right? Okay. So that's as far as the uh, overall sector and indices review is concerned. In case you are watching the recording of this and unfortunately, I think there was a glitch or I forgot to press the record button. There's maybe about 15 minutes of recording missing, and if you are watching this recording and you need a quick review, just get in touch over a phone or webinar or something, and then maybe we'll just do a quick catch up again with the latest data at that time. All right. Okay, so the plan is to look at the sector indices, the um, Nifty Junior stocks, which is where, as you've already seen, most of the pain is in terms of how much the Nifty Junior has fallen. Of course, I hope we all know that there's been a complete name change that has happened in the way Nifty, or rather the NSE, is labeling the various indices. So everything is Nifty something. So Nifty is the big brand name that NSE is taking up, and Nifty Junior is now renamed as the Nifty Next 50, right? So I think we all are aware of this, so I'm not going to spend too much time on that. So I'm going to go through most of these, hopefully all of them. What is to be seen up front is, I just scrolled through the entire list, it's in alphabetical order right now, is you can see a lot of red on the right side of the screen. Basically, that's the column to show which are the stocks at 52-week lows. So there are a number of stocks doing 52-week lows right now, right? So that's one thing to keep in mind, which means there's a lot of momentum on the downside. There's also something else to show you, which is this daily market report that we build in BIC. Basically do entire market overview and see how things are. And if you look at that, then you will see basically that in this, let me see if I can make it bigger. Right, so just ignore the numbers and the tables, but essentially this shows you stocks at 20 days. How many stocks have made 20-day highs, 20-day lows, 3-month highs, 3-month lows, and 52-week highs and 52-week lows, right? So if you just look at it, you can clearly see this line, which is just shooting up over the last 2 weeks, is basically telling you that more and more and more stocks are gaining downside momentum. A lot of stocks at 20-day lows. The number of stocks at 3-month lows is also increasing, and the stocks at 52-week lows, unfortunately not a very bright line here at the bottom, that's also increasing. And this is, probably all set to just get worse, right? So we've got this market-wide data, as you may call it, and this is also showing very bearish tendencies, right? So we should definitely expect lower values. Okay, so with that, let me now jump into the stock-wise analysis. Actually, we're going to improve on this. It wasn't ready, so next session it will be ready to have all these stocks listed, the stocks organized in a sector-wise manner, including the Nifty Junior stocks and the Nifty stocks and all. Right now we have them by alphabetical order. We need to do some tweaking so that we get it all clubbed together. So if you look at banks, we're going to look at all banks at one time, all the autos at one time, and that sort of thing. So right now I'm going to have to do this a little manually. So just hope you'll just be a little patient. So we're looking at Apollo Hospitals first, right? And well, quite honestly, this is in an uptrend. All right, so this is Apollo Hospitals weekly chart, and that's definitely happy surprise, right? A stock in an uptrend and not really having broken down. So clearly something's cooking in, let's see. Okay. So look at it from almost not the best line, but it will do. From 2010 to 2015, the stock has just kept going up, but no reason to believe that it's going to keep doing that now. It's basically gone sideways, and one could say that one is having some sort of distribution, a complex correction, or top being formed. This is a weekly chart, remember, left shoulder, double head here in this place, and then a right shoulder. And then if 1220, 1210 breaks, then we could definitely see much lower levels on Apollo Hospitals. Switching to daily, and actually it doesn't seem to have too much downside momentum, right? So we'll just definitely have to keep a watch on that, right? Okay, there is some news that has just popped into my box. Okay, I'm just going to read this. Securities Exchange Board of India today cut position limits and daily price limits to curb speculation in farm futures. Right, so this has nothing to do with stocks. The steps were taken with a view to curb speculative participation and consequent volatility in price of agricultural commodities. Okay, so earlier there was a limit of 6% that has been revised to 4% now, and there'll be a cooling off period. All right, so it's really not relevant. It just came out, so I thought. All right. Okay, so that's Apollo Hospitals. This is not really going down on good volumes, but then when panic sets in, it's just a matter of time when the volume sort of has to appear, and well, maybe somewhere there 1250 is definitely where it's very likely to go down to 1250, and fantastic support at resistance at 1400 or thereabouts, and that will be a good that'll be a pretty good risk reward ratio in terms of shorting, right? Okay, then Ashok Leland. All right, so clearly Ashok Leland. Now the thing about Ashok Leland, by the way, fundamentally it's doing quite well, right? Recently you might have heard about it got a $50 million order from Zimbabwe for supply of vehicles. Earlier there was one in West Africa for some 150 or $300 million a few weeks back. So right now this has clearly broken some important supports, right? But it is done that on really low volumes. That's the interesting thing, right? So this probably supports sitting somewhere at a lower level in terms of people who've recognized that this is probably fundamentally good. So local sales may not do very well, but global sales have really picked up for this stock. and you can see, the volumes today are quite less, right? So this is sentimental, and I'm wondering whether we're going to see a lot of stories like this of low volume breakdowns, but the Marubozu candles being pretty strong. So something like this, 81 seems to be really good support. That's the 200-day moving average, right? And if that comes, then maybe one should look at buying it actually. When you have low volumes like this, I would say better, stay away from shorting it. Watch it at lower level, watch it to reach lower levels, and when it does that, maybe one can actually pick it up. Okay. Next is Oro Pharma. Okay, oops. So I think the stock. Okay, I need to skip this because there's been a corporate action, and for some reason my chart has not corrected for that. So unless I do that, I can't really do the analysis. This will be fixed by the next session. My apologies. Then Bajaj Financial Services. Okay, so that is also going down on low volumes. All right. All right. So that's interesting. All right. So that's going down on low volumes. It's come to an important. That's the life high, I'm guessing. Let's see. Yep, that's the life high. All right, right. So it's come there to a life high, and good long-term trend line, which is now clearly getting broken. Now, even if I want to be generous and do some adjusting and try and keep it out, it's really not going to work, right? So okay, so one after the other, I would say there have been many of these uptrends which have gradually gotten broken. It consolidated sideways, and if you actually look closely, um, it looks like some people will have different opinions about this. Somebody could say this is a sideways rectangle, and that would absolutely be fine. Or somebody could even somehow maybe imagine or look at a head and shoulder top, left shoulder there, a sort of funny head here, and a right shoulder which is really, really extended. Now, whichever way you want to look at it, if you look at the measuring implications, we are talking about 1870 to 2050, 150, 200 rupees. So from, if it breaks 874, then 200 rupees down. 1674 is where it could easily come to, right? So Bajaj Financial Services. So all right, all right, okay. Again, very low volumes, or not, I wouldn't say very low volumes, but the volumes are clearly, on the lower side. That's the definitely interesting part. For those of us who are looking at, a deeper understanding, one should probably look at uh, delivery volumes. All right, these are not delivery volumes, these are like total volumes traded. If you look at delivery volumes, you probably get a much better insight. I guess that's probably one of the to do things we have to do in BIC, and get a extracted data for delivery volumes. All right, anyhow, so a breakdown of this, a shorting opportunity, definitely anything going towards 2000, you should look at shorting Bajaj Financial Services, right? Okay, then Bajaj Holding. So if you look at Bajaj Holding, right, so that's the holding company for a lot of the old businesses of Bajaj, and has investments in various other Bajaj Group companies. So again, low volume, that's that's what is making me hesitate in saying get in, sorry, get on the short side definitively. It's early days, yes, but I'm a little surprised to see so many stocks already, or rather majority of the stocks so far with low volume on the downside. All right, so I guess we just have to wait and watch, but there's clearly a downtrend right there, and it's at an important support. It's like a triple bottom come multiple tops there, and if it does go down, then clearly I think this is easily going down to 1555, 200-day moving average there, and that's definitely a good shorting opportunity. Any move up to 1650 should be used to short. Okay, next, Bank India. All right, so not sure what we were thinking here, but all right, so just to make it clearer, I've just put this in a weekly chart, and what you can clearly see is that this has really taken a severe beating. All right, so this is where some support was, and that actually already broke, as you can see, many weeks back, right? And that downtrend line is really strong, right? Okay, so that's a pretty strong downtrend line, and now this one has gone down on higher volumes. There's absolutely no doubt about that. Right, let me see if not this. Where is that? Yes. Okay. So if you look at this, this is at the bottom, you're going to see volume charts, price volume trend and on balance volume, and both are trending down along with the price, which basically means that they're going down on higher volumes. Otherwise, we would have seen a flattening out or a divergence here, which we clearly do not see. So this is what um, Bank of India is doing, and probably most of the other public sector bank stocks also. Now, if you go back to this weekly chart, then you will see that the next support is there at about 84 rupees. We are at 94, and very unlikely that it's going to go up without touching 84, right? By the way, that's a good 10% down move from current values, right? If that breaks, then, well, I would say 50, just a psychological number. That's the number to look at if that happens, and it could easily happen. And look at the cut we're talking about. This was almost a 500 rupee stock. 500 rupee stock is already below 100. What sort of value destruction has happened in this space? We can only imagine that, right? So that is Bank of India. Then while we are at it, let's also, since it came on my screen, I'll do Can Bank. Right. Okay, sorry. Right, and that is Can Bank. This is also weekly chart, and a stock which was close to 750 is now at 179, and that was the last support for over 5 years. Is this stock going back to its 2008-9 lows is the question, because really there doesn't seem to be any support. There would be some support in this zone here, right? Let's just put something there just for our reference. Some support is there in this zone, but really it's going to be a tough one to say, you know, um, hmm. Oops, I'm just feeling really crazy. The silence was because I was like, God, as usual, the one thing that doesn't seem to have changed is whenever I have done Nifty Junior stocks, they just seem to have a much better set of opportunities, both on the way up or way down, and somehow just seem to be doing them a little too late. But anyhow, nevertheless, right, so let me snap out of that. 150 bucks is, I think, very distinctly possible, and you can see the higher volumes, right? There is, I'm just looking at, are there any public sector banks in this space? Nope. Okay, so the one bank which is there in here is Federal Bank. And well, that's also down. Really not a public sector bank, right? It's very much a private sector bank. But look at the volumes this week. Just look at the volumes this week. This is massive, right? And some news came out actually, maybe, I don't know, results, I'm guessing, a few days back, and this was horrible results. Probably Tuesday. Yeah, just came down, and it is just going down even more. Seems like a tweezers triple bottom for what it's worth, and okay. Hmm. This is yeah. If you're brave and you want to look at this, then have a look at this on Monday, because if that level breaks of how much is this? 47.50, just go short on it, put a stop loss about 50 paisa, 1 rupee higher, and then this could really crack much further, right? Question is where, and quite honestly, all right, so let's see if the momentum continues the way it is. And these things, by the way, when you see volumes like this, what you're seeing here, this is not a fall that's going to probably stop quickly, and I would say at least 45, right? That's 3 rupees down, 1 rupee up. That's a decent risk reward ratio, 45. And then if 45 breaks, then you're only looking next at 40, yeah, 40 thereabouts, right? So one could perhaps be short for a good 20%, 7 rupees down on Federal Bank, right? So that is, I'm a little surprised because I thought the private sector banks were doing better, and clearly this one is not. Okay, so that's sort of the banking thing. So let's look at some other sectors now. So Bharat Forge, right? So capital goods, we already saw that there was a big cut in the capital goods space, and what you're seeing is a massive top that has formed over last quarter of 2014, the whole of 2015, and now running into 2016, right? And this is well, if you could put that, you can clearly see the uh, what should I say, downtrend, right? Both short term and long term, except that this is not on really good volumes, right? So that's definitely again a surprise. So this could go down, but might also swiftly bounce back, right? So the public sector banks were really good shorts, but somehow all the other stuff we're getting back into that thing of going down, but you're not really on very good volume, right? So 750 could be support, 775 could be support. I think we just move on. This shouldn't keep trying to find opportunities. They will present themselves, and when they do, you just need to uh, grab them, right? If this goes down, by the way, it's already from 1400 to 800, so it's lost half the value already. Who knows? This is not a stock which I think we should look at this. Okay, so just to give you some perspective, In 2001, this was a stock which was 10 rupees. It went all the way to 400 rupees. So you 40x your money. And then after doing that 40x over the next 3-4 years, this stock went from 400 odd to a low of 80 rupees, right? So that's a massive wealth destruction. And then from 80 rupees, it went back to about 350, 370, thereabouts, went back down to 200, and from 200 went to massive number. What was that? Let me zoom in. Yeah, it went 2,300, from 200, 6 times, and then now it has become half again. And well, it could really swiftly go back up. All right. Okay. So this is where we are with Bharat Forge, and I'm just saying that at much lower levels, it could really be a good buy. As a company, it is probably something which is really good to track in the long term. Okay. Then Britannia. Okay, so this was, so FMCG, all that, of course, they are basically into biscuits. So 3,400, 2,800, basically a consumption stock, but at this point, you know, it's I would say at least going to 2,740 in my opinion. Volumes are really not there, not even average volumes, but I wouldn't be surprised if it comes down. It's been squeezed by moving averages on the top, and the support is at much lower levels. So good resistance at 2,900, 2,940, and then I think at least 2,740 is a level to look forward to. All right, so that is Britannia. And we have Colgate Palmolive, another one in the FMCG. I think I'll have to skip this one also. For some reason, the data has not corrected. Sorry about that. Then Container Corporation of India. So logistics, all that, it's going to be a big thing. It'll be interesting to see how Modi reacts to these economic issues, right? Because he basically came on that promise of and that make in India thing and all that, and you've got these global headwinds which are really not going to help him at all. So we'll see how that would need to pan out, right? So 1,200, and most probably breaking down 1,200. Once it breaks here, then could easily go to 1,100, 1,000 also, in my opinion, right? So Container Corporation, I think, is looking like a good shot, and the volumes have definitely peaked up for this for the first 2 weeks. So if 1,200 goes, as a matter of fact, if it does try to go up to 1,250, use that as a shorting opportunity, and definitely go and short this if it goes below 1,200, right? So that is Container Corporation. Then Cummins India. So another capital goods stock, right? 1,200, and now it is at what, that levels, that 200-day moving average providing some support. There's a tweezers bottom here at about 950, and if that breaks, then definitely looking at lower levels to come to somewhere around 875. That's also a pretty good shot, right? So that is there. Okay, right. So again, a lot of moving averages there, resistance around 1,000, 1,020, and even at 983. And if I really doubt whether that it's going to go above, right? Slight pickup in volumes today. Then we have, after Cummins, we have Dabur. All right, so came down, but look at the really small volume in Dabur, right? And I think it's at 250, really interesting psychological number, right? So at 250, it's come down on low volumes, probably in reaction to HUL's bad results today, and maybe this one's results have not come out. Oh, which reminds me, I should have mentioned this earlier. So this is result season, right? Third quarter results are coming out, and a lot of stocks are going to be reacting to that. If the trend is of any, if the results so far of any indication, only IT company seems to have some hope. Everything else is really going down quite fast, right? So that is where our um, right. So no reason to believe that this will also not give, this will give good results. No reason to believe that. So I would still be bearish on this, but keep the event calendar in front of you before you trade. You know, that's, I think, important. And if it goes above 260, that will really, to even 255, I think that'll be a good place to short this stock. And then after that, it will probably just, you know, who knows, crack to 230. I think that's where the next support is on. All right, so that's where it is. Then we want to do Divi's lab. Oops, I'm going to skip this. But I'll at least, because some corporate action correction has not happened. But one thing I think at least say that this stock is probably going to go to at least 1,000 rupees, right? Again, the volumes are low today, but I think it is going to search for 1,000 rupees before it can go back up. It's just a psychological number, but it's going to really do that. It hasn't really tested that at this point, right? And I will bet that in the past, you know, 1,000 rupees was important level. So even after adjusting, you will see that it will come there, and it has to go to 1,000 before it can really take some good support. So basically, what I'm saying is it's definitely a short to consider, right? Okay. Then Aisha Motors. Okay, so this has really gone down. 21,000 has become now 16,000. Bunch of moving averages all concentrated there, but volumes are lower. So this is where sentiments are, like, you know, overpowering. So you got sentimental down moves, but not really any significant, high volume selling at all. And these are the ones you need to be careful of. This might go maybe at best to 15,500 or even 15,000. But at this point, it would be better to assume to that it's not going to break that 15,000 level, right? So let's see. That's okay. I'm going to move that, but this is definitely all right. So that's just for reference later. All right. So I think 15,000. I'm wondering whether now, looking at this long-term chart, whether even 13,800, 14,000 is possible. It definitely can't be ruled out, but the volumes are on the lower side. Okay. Can you just confirm that you can hear me? Anyone of you on chat? It's just saying I have an audio issue here. Okay, so if you look at Exide, well, automotive. So here's the thing about a company like Exide. You've got raw material prices for what they need really coming down drastically. Lead, copper, lead acid batteries and all, and therefore should really be good for them in terms of margins improving, because I'm sure they haven't dropped their battery prices. Now you can see that it's actually come to a multi-year level here of about how much is that, 140. Okay, and until and unless the auto sales or the replacement market really vanishes, this is wonder which is not going to happen. This is like probably fundamentally getting better and better, and I think of course we're not looking at fundamental data here, but again, notice the low volumes in this and how it is going on down on lower and lower volumes. So these are the ones you should really be careful, because shorting it may not be such a good idea. On the other hand, watching it for lower levels, and let's see what lower levels can we look forward to. 120 maybe. Yeah. It could just completely turn around and then go up. So the thing in stocks like this, or charts like this rather, not stocks, is that you don't know when the sentiment will suddenly turn, when the market will suddenly say, you know what, this thing is probably not really so bad, and it might just reverse. So I think I just stay away from that. Like Glaxo. Okay, so Glaxo has been, as you can see, all those dotted lines there are the long-term 50-day, 100-day, 200-day moving averages, and that has really been uh, the support resistance of this stock for some time, and I think now it is really a goner, in the sense that all the supports and resistance have all the moving averages, sorry, the moving averages have become very important resistances, I would say, and really not much of a hope that it's going to break out of all these moving averages. So the higher it goes to about 3000, 3300, it will be really, really good to short it. And what happened basically here is you can see this breakdown, and this breakdown here has taken it below 3200, and then once it goes below that, then this 1, 2, 3, 4, 5 day support, a breakdown 3180 could easily be going down to 3120 with a good what would I say, stop loss around 3240, right? So that is Glaxo. And then we've got Glenmark. Okay, so that has, again, this is sentimental, right? This sort of stuff where the volume is not really there, sentimental stuff, and which means subject to a sudden bounce back sometimes. Okay, right? And this could easily move down to, okay, we are at support. That's a nice surprise. But really good, okay, good downtrend, and could accelerate down further. So watch for the break of I would say 825, 830, and if that break happens, then we will see definitely lower levels happening at least till 750. Okay, so that is Glenmark, and then Godrej. CP. So Godrej Consumer Products. Okay, so we are talking about so there's Godrej Properties now. There's a whole host of Godrej companies. So 1350 was an important level. That's definitely gone. We had this sort of an uptrend here, ascending triangle. Well, if you agree that this is an ascending triangle, then the measuring implication of this is what should make us a little concerned, because now we are talking about 1350, 1200, 150 rupees. 150 rupees from the place it broke down, that is 1100. So 1200 is the 200-day moving average. That has to uh, you know break, and then 1100 could definitely happen. Okay, so all right, that's where we are, and you can see that the 1100 level is you can see that the 1100 level is actually a nice top there, right? So ascending triangle broken down, and I must say that as far as this ascending triangle is concerned, the volume picture is not typical like we want in a textbook, but one might say that the breakdown is starting to happen on higher volumes. There's definitely a trade worth watching next week, right? And GSK Consumer Products, whoa, all right. So this is just a big sudden fall, completely. Okay, just 1 second. Okay, so one of the things that you can see with GSK Consumer Products is that this is definitely going down on big volumes, and right, so that's where a multi-year support is basically. Okay, and that's where the stock is right now, at that multi-year support. No reason to believe that that support is going to hold. If it breaks, then really not too much support available. I think 5,500 is where we might be looking at, right? So a very, very, I would say, unusual chart. In a sense, it's really not nice trends and supports that we see, but clearly I think downside momentum in 5900, or not even 5850. I think that'll be better to put a trigger shot at that level with a stop loss at 5950, and then yeah, and if that, then 5600, 5500 is easily possible on GSK. And coming to Hind Petro, now this is interesting because as we know, crude oil has been really coming down a lot, and the input costs for this company are dramatically coming down. And as a matter of fact, today you could say that it's actually done well. It's actually gone up, and if you look at the nature of that candle, everything was on a downtrend and everything. This is like still showing an uptrend for what it's worth, but the upside is probably limited only for sentimental reasons, I would say, unless there's something really dramatic that happens to this profitability of this company. I think you know limited upside. I wouldn't short it, but on the other hand, I wouldn't buy it either. What I would do is, if I am holding this stock, I would be prepared to jump out of it Suppose it breaks about 860, 855, then I would like to get out of this stock. Okay. All right, then we've got India Bulls. Oops, my India Bulls Housing Finance, again breaking down on low volumes. Now, as far as the housing finance companies are concerned, reduced interest rates, etc., RBI reducing the rates, and there might be a, maybe a further reduction, uh, crude oil coming down, prices coming down, inflation coming down, and all. Except, of course, the big thing is what if US increases the rates? There, right? Then how do we balance off capital inflows, outflows, and all? But again, another stock which has gone down on sentimental reasons on low volumes. Okay, so business-wise, this might be on better standing, but technically, it's just at the 200-day moving average. That's exactly where it is right now. And I would just watch for that. If it breaks 640, then short. Otherwise, just stay away from this at this point. Okay. Then Infratel. Okay, so this was the company that got spun off from Bharti for the tower business. Still holding on, not bad, 380. Okay, so it's really a surprise to find companies like these which are mm, not part of the downtrend. How, yeah, that's how I would put it. And again, not really going down on high volumes. I would not be looking at shorting this. If it comes to 370, 360, I'd put an alert to perhaps buy it even, right? So that's what I would do with Infratel. And then got IOC. Now IOC, now this is a surprise, right? So Hind Petro is going up, but IOC is going down, and they're basically, as far as I know, broadly speaking, the same thing, the same company, same business in terms of, you know, oil marketing and retailing and also. Why is IOC going down while Hind Petro is going up? Honestly, I don't have an answer. There'd probably be some peculiar reason unique to these companies. But again, I would not want to short this in a hurry at all. There is the thing of fundamentally these companies are good, and at some point, if the market does, uh, take a support at some point, it will. Then these are the companies which will just start to bounce up simply because crude oil is at much lower levels. And by the way, as far as crude oil is concerned, the Iranian crude oil has still not come to the global market, so people are just wondering what will happen. Okay, JSW Steel. So we saw metals were in a pretty bad situation, right? So at least as far as that is concerned, that is, the Li-Fi triple top. There's a lot of, not a lot, something that, if in case it broke out, then what would happen? It definitely one of the much better metal stocks, right? Most of them are way below moving averages. Here the moving average is actually supporting this at this point, and in spite of the big candle today, the volumes again. So this is, if you look at Tata Steel and SAIL and all, I'm not sure it's such a healthy picture, but this is for whatever reason showing some strength, and one should really think about, I think, going long on it at lower levels rather than shorting this at this point. So I'll leave it at that. In terms of, there's no urgency to do anything with JSW Steel. If you're holding it, then I think you should just continue to do so, right? LIC Housing Finance. Okay, so this has definitely, okay. Uh, okay, and now this one has come down on slightly higher volumes. no doubts about that, right? So if it goes up to about 480, 485, good place to short it. First support will be at 456. That's where the 200-day moving average and the horizontal support is. And if that breaks, then easily this is down to 4. I would say, yeah, about there at 430 is easily possible, right? We have this telltale signs that, lower highs that happen over days before a big fall. And if you're a trader, you've got to notice these things and really be patient about them, right? uh M&M Finance. Okay, so like all the other finance companies, and this one especially, as far as autos goes, focusing in that area, of course, not a very what would you say, positive sign for them. You Yeah, okay. Having noticed, please notice the low volume, right? Volumes like really coming down, and today's fall is like on really low volumes, right? Just 1 second. Okay, so M&M Finance, again on much lower volumes. That's the whole thing about it. And does it take support at lower levels, right? So basically, here the risks are high of going long or of short, and where the risks are high, it's just better to stay away from it. Let it give you a high probability trade, and then we can look at it. Okay, so that is M&M, then Marico. Oops, I'm going to skip this. The split for some reason. I need to clean up my database. Then McDowell. Okay, so alcohol clearly going down, and let's come to so it's coming to that zone where it had a lot of support earlier. Okay. And there's going to be a lot. It's not going to go down in, I think, one straight line, that's for sure. It will probably 2500 psychological level. It will do that, and then it will do all sorts of other drama. And yeah, 2250 looks like a very distinct possibility to me. Okay. Again, volumes bit of an issue, but I think very clearly we have any bounce up to about 282750 should be used for shorting. The best opportunities for shorting all of these, many of these have obviously been at least maybe 2 weeks back, but anyhow. All right, McDowell, and then Motherson Sumi. So darling stock for quite a while with many people, including some of us in BIC, because well, at least some people made a lot of money on it last year. And then the Volkswagen scandal broke out, and then the stock just cracked. Major suppliers to the Volkswagen group worldwide, and now it went up, sort of did a double top there, if you notice, at around 300, and then it's now at 250. And it's going down. It was going sideways on low volumes, and the volumes have now picked up. It's going at least to 240, okay, most probably to 230, and then we can review it at that time. 255, 258 is where the um, uh, stop losses for the short, right? So that's this in Sumi, then MRF. So MRF, as you can see, the importance of um, what do you say, moving averages, right? The 200-day moving average providing a lot of support for November, December, and January, and then finally, it's just not good enough, and it has just given way today, even though it's on low volumes, right? It has clearly a breakdown which has happened, and then from these levels it go to about 35,000. Okay. Yeah, we'll probably go to around 35,000 at least, right? I'm not sure how many people actually even trade this because it is a multi-thousand rupee stock. We actually shouldn't stop one from trading just because of that reason, but yeah, quite a few people have mind blocks about that. And then NMDC, so has this broken live flow? Yes, it has. Okay, so in the mentorship program, we had actually identified this as a stock which was not going to do well at all, and you know, various research reports and on what the company was trying to do, etc., etc. And well, uh, that was a few months back, and haven't reviewed it fundamentally for a long time. But the stock has made clearly new life flows and could continue on its way downwards. 86, where is the support? There is no support, so we'll just have to look at what do you say, uh, uh, we'll just have to look at really psychological numbers, 85, 80, whatever, unless we find some fundamental report to figure out some value at some really much lower levels, right? So that is NMDC. Then OFSS, Oracle Financial Services. Okay, so hadn't done much. I would say this is heading towards 3,500 at least. Again, this is on low volume, so that's definitely, I think, well, something to keep in mind. But yeah, 3.5 with a stop loss above 3. I don't think it will be able to even climb to 3,690. It's going to be a lot of resistances which are there. Okay. Oil India. So this should actually be bad because ONGC, Oil India, all these stocks basically make their money based on the price of crude oil, and as you can see here, it's done all sorts of drama ever since it got listed. Whoever got into this really didn't make any large money, and now I think it is clearly heading to its life lows. The life low was here. The low was 341 rupees. It's at 355. Crude oil keeps falling. Just every reason that this should fall to 341, 340, and then if that breaks, then I think in steps of 10 rupees downwards is what we can expect. Okay, so oil, then Petronet. Hmm. Mm. All right, so here's the lesson on Petronet. See how I think, not I think, you can clearly see how the 200-day moving average is actually providing support at this point, okay? And it's most likely that this support is, I think, going to break. And when that happens, that will be a good shot. It did break intraday today, but then the market did, come back up. Good resistance at around 213 to 20, I would say, and then fall to 190. 190, 185, I think is a very distinct possibility, right? So that is as far as Petronet is concerned. Then we have Power Finance Corporation, and this is like behaving like the public sector banks. If you, it's just tanking, but why would it need to do that? I really don't understand. Because PFC basically institutional investing to, or rather institutional lending to you know, uh, various infrastructure projects for power infrastructure, electrical power in India, and hmm, okay, at least to 160, but I think this is going to be a high risk shot, simply because it could just fundamentally, I don't see what the reason is, but that's why I'm saying it could just bounce very quickly and then you get stopped out on that. So might as well stay away from that. RCOM, okay. So, one of the things about all this telecom is the impending launch of 4G services by Reliance Jio, Mukesh Ambani's group, and how these will, react to that. I think very clearly this, yeah, right. So uptrend has clearly been broken. There was a clear higher top, higher bottom um, pattern that was happening, and then you had the moving averages, long-term ones also bottom out, turn up. So in a sense, this is now bullish from that definition, or the moving average crossover definition. But now it has broken down of that today very, very decisively, again not on such great volume. So that's the, I think, the big thing. So you have I think 65 as the short-term support, and that's where it's exactly going to, not exactly, but going to go more or less there, because now 75 has become a really good, 75, 76 has become a really good resistance, and going to 65 is a very, very distinct possibility in my opinion, right? So that is there. And REC, oh, so there's all this power finance, REC, this is somehow, fundamentally there's no explanation in my opinion for all these things. Actually, there's very little explanation to even say why they should go up, because they're like slow lending utility type companies. But sentiments is 200, sentimental, the psychological number just broke down. No real what would I say, probably no fundamental reason, and on the basis of simply that, it could even go to 165 or thereabouts. Okay. Hmm. Okay. You can clearly see the lifetime double top in that zone. Okay. And it is most likely, I think, coming down to 165, where it will probably find some support, and then if that breaks, then we'll review. Okay, so REC, well cap. So Reliance Capital again. All right, so this is clearly going down on good volumes. Okay, 200-day moving average, nothing is helping at all, and supports being broken. This is definitely a short, right? And where could this be going to? At least 350. Yep, at least 350, and then maybe even 320, 325. All right. This is a very, very important support zone for Reliance Capital. This is a 10-year support, and if that breaks, then it's just gone. And we go to 200, and who knows, maybe even 100 rupees. This is a stock which is 2000 plus. It's already come to 400. A 400 rupee stock could easily go to 200 or even 100 by the looks of this at this point. Okay, so that is Relcap, Rel Infra. That has been shooting up for quite some time. You can see the massive volumes on the way up, and well, actually even equally massive volumes on the way down. So I'm just wondering, these are quite large companies in terms of market cap and all that. So really manipulating them is takes a hell of a lot of money, and not so easy to get away with it, in my opinion, right? So I'm just wondering, what this whole news around this up move was, and what is it making it go down. And this sort of stuff could just turn around equally fast. So right now it's on the 50-day moving average. Maybe it will come to the 200 100-day moving average, a sort of double support here, and then go back up after that. So I think I would just leave it for now on that. Oops. And not take too much of a risk with this sort of a stock, because for whatever reason it had been running up on those massive volumes. If those reasons just assert themselves in the market again, then suddenly you're on the wrong side of the market. So, or if you're trading, I think very, very tight stop losses on this, and then only trade. Okay, so that is Reliance Infra. Then we have Steel Authority of India, right? So this is what I was saying, when you're looking at JSW Steel, look at Steel Authority of India, 220 rupee stock, okay, which is now a 42 rupee stock. That's like, what sort of a cut, and that's not what has happened in JSW Steel, right? So some really, really good strength in JSW Steel, which is not there at all in sale. Now it's just been clearly trending down for since 2014 second half, and lower tops lower bottoms continue to happen. So it's gone from 80 to 45 and looks like it is set to go even lower now, okay, to at least 38 rupees. Okay, so that is a distinct possibility. Okay, 38 rupees 40 could be a psychological mark for some time. You might just see a punch down to 38 and then it turns back up. But at this point, just trying to yeah, on volumes. Just looking at indicators. Some things are just obvious just with price volume, but sometimes just like to cross check. Okay, Siemens, another capital goods space, and oops. All right, so this clearly, these levels broken down. Okay, and but again, low volumes, right? So that's the thing. This might go to, I don't know, 1050 or 1000 at psychological number. You just have to wait and watch about that. Okay. All right. So I think 1000 is clearly on its way as far as Siemens is concerned. That's the downtrend that we have. I can put a better one from there. And yeah. Okay, so that's 1000 as far as Siemens. Where did that page go? All right. Sriram Transport Finance. Okay. So this one, now financing opportunities might reduce, right? Because vehicle sales, sort of slow down. Who knows? Okay, but what is clear right now, technically, is again, low volume. Just you see the really low volumes. I mean, these are the stocks which you never know could just be up 3, 4, 5% on Monday. So I'm not even wanting to take a call on this. We're most likely going to be wrong either ways. And it's just better to watch these and take it one day at a time. Be an intraday trader if you want. Okay, well, on things like this, because again, this is at this level. Okay, I'm not saying it's exactly there, but it's there. It's a sort of support which did break, but very low volumes. It could be what is called in low theory a false breakout or a false breakdown in this case, and you just have one big, reversal the very next day, a sort of V-shaped recovery, right? So that then Sundaram Finance. So looking at Sundaram Finance, we've got just at that level, as you can see. Um, Yesterday's volumes were high on the downside, today's were not. That's interesting. And 1200, I would say. I mean, this is just, sort of beating the drum, waiting for the order to fall, as it were. And that order will come most probably at some point, like you have seen in many other stocks. It might just be a one day, move down, but it'll nevertheless come. And that's when you have to really jump in quickly, jump out quickly, right? You could jump in expecting that you could short this with a stop loss at around 1360, and just it might go to 1220, 1230, and then you quickly jump out of that, right? Okay, so Sundaram Finance, then Tata Chem. Okay, so Tata Chemicals, many years of going sideways, going up, not doing much at all. In 1996, this was at around 260. It is now at 374. 2001, it went to 37 rupees. Wow. Okay. Now this is like a tweezer's bottom on Tata Chemicals right now, and again, this would be one of those things better to wait and watch 370, and then we'll take it from there. All right, we've got a few more left. Tata, yeah, sure, Kundu. 1 second. Okay, Kundu, what do you want to share? All right, so this is Tata Global, and again struggling with the moving averages, long-term ones, right? Really not going anywhere. As you can see, a very sideways stock. 2003 to 2006, it did some massive move, but after that, really not much. So I don't know why one would invest in it, or even trading wise. Of late, the volumes have really come down, and suddenly it can maybe go to 125, though there is definitely higher volume. Somehow just don't like the feel of the chart, if I can put it that way, to think about trading this, right? So find something else if you want. Titan, okay, so 440, that was its peak price, and it has definitely come down from that. Okay, okay, all right, yeah, so definitely come down from that, and most probably heading to 320 in my opinion. This is something definitely I think one can trade. The thing about it is that it's now going down on higher volumes. Massive volatility yesterday. You can see that big upper shadow, and then some news, maybe results, I don't know, right? So at least till 325 is what I'm thinking, probably 315 after that, and definitely can trade this with a short of around 348, 350 for sure. Okay, then finally we have UBL. All right, so this is definitely a surprise chart or a pattern for today. We've got a sort of counter attack line. This is very unusual to find actually in candlesticks. Not a typical one, but I'm talking about this candle and this candle put together. You know, this the green one sort of counter attack to the red. And today it has closed lower, but the pattern, if you look at it, is interesting. And I think only for academic reasons it will be worth tracking to see how it behaves in the future. And we take it from there. Okay. Having said that, if that level, that's at 850, I think. Yeah, if 850 breaks, then 800 is a distinct possibility. Having said that, it went to, yeah, see there, 800, but it did, how do I say? Didn't go there in a straight line, just went there intraday and sort of bounced back, and on many days it didn't even reach 800, but somewhere there seems to be some support there. But and yeah, that's we can. And finally UPL, United Phosphorus Limited, again very low volume fall, right? Except little pickup has happened last 2 days. Okay, that's the level to watch out for, and that level is at 385. If 385 breaks, that's when you should be getting out of that. Otherwise should definitely not. And yeah, I think all right, so this is definitely in a downtrend, and that's that line I put, that tweezers or the support line, where is that? Okay, even this I'll just make it dark. If that breaks, then you've got probably a good shot there, at least till 366. It's at 390. At 366 thereabouts is definitely a good shot, right? All right. Yeah, watch for that level. Put a stop loss at around 400 psychological mark. That's for sure going to be a good resistance zone for this stock, right? It's at 390, so 10 rupees up. You're talking about 366. Not the best of risk reward ratios, but not too bad either, right? Okay, so with that we've come to the end of all the Nifty Junior stocks, right? So in summary, I would say that the banking stocks are the ones, definitely some of the capital goods stocks, and the non-banking finance companies, including India Bull, Shriram Transport Finance, and all. So especially those one in the financial space. The other ones, which are, let's say, like Apollo Hospitals or FMCG, a lot of them are showing um, down moves on low volumes, right, on clearly lower volumes. even though we've got 3, 4, 5, 10% down moves today, we've got low volumes, and especially those ones, I think one should not be looking at shorting them. One should really be looking at just tracking them, and if they go to a lower support, maybe think about actually picking them up on the long side rather than anything else, right? So that's basically the view. Having said that, the global markets are really in a pretty bad shape, and as we speak, or as we come to the end of the session today, just to go back to where the rest of the world is, it's definitely not a pretty picture. The Dow Jones Industrial Average is now 3% down. Transportation Index is 3.2% down. And if you go to Europe, okay, so some small recovery, right? But nothing, I would say, great, right? That's the thing. So I think still all said and done, if you look at this particular picture, Monday morning on the Indian market is, I think something dramatically good happens, is not going to really be a pretty picture, right? Okay, so it's like I said, I think a shorter's paradise. A lot of stocks that can be shorted, especially the banking financial side. The other ones little bit circumspect, and like we're looking at 15-20% potential down moves on not just Indian but global stuff. So that's something to be very, very conscious about, because that 15%, 20% down move is not going to happen in a day, probably not even in a week, could take 2-3 months to happen. But on the other hand, you never know. A circuit down 10% done in a day. Before going into any committed long positions, you wait for what is called a capitulation event, right? An event or a price behavior in the market where there's like the final wave of panic. A good time to probably revise a little bit of your Dow theory. After that is when one should be looking at building long portfolios. Till then, I think it's just better to stay away from the long side, and definitely on the short side there are what a galore of opportunities, I think, right? Okay, so with that, we're coming to the end of today's session. So we will be doing this on a regular basis now on every Friday. That's the schedule. And we look forward to your participation. Do send in your feedback to, via email, or get in touch with me on the phone, and love to, make this better. The flow will improve. We'll start having some notes which you can send out later. Just give it a few sessions, and I think you're going to find it smoother, more actionable and all that, right? Okay, so thank you very much. Thank you for those who watched the recording later. The links will be sent to all those who registered by tomorrow afternoon, I think, so you can review that, right? Thank you, good night, and have a very good weekend. Bye.
Thank you. Bye. Good night.
Bye.